Good afternoon, everybody. Welcome to TraderMerlin Show for your Tuesday afternoon edition. Taco Tuesday, Trivia Tuesday, whatever Tuesday you want to call it. It should be a fun one today. Markets were entertaining, to say the least, continuing on with what we've been witnessing over the past couple days, particularly with regards to the Russell 2000. So we'll dive into some of that here shortly. I thought I would go to listener questions, and one of the questions that came in, unfortunately my time permitting today, I didn't get a chance to put all the names on the slides like I normally do. I think it was John sending a question asking, is now the time to be buying some of these bank stocks based off of earnings? And it's like, well, is it? Well, let's take a peek at some of the numbers here just to give us some reference. There's my banking bonanza. Thank you, AI, for giving me a nice little picture of a positive looking picture of banks. So I wanted to start off with just looking at kind of bank earnings and trading activities. This is investment banking and then trading activity, kind of see where their numbers are coming from, because this is, in my opinion, the telling story, which will answer John's question of, is now the time to be buying into banks? So this is investment banking, and you can see that we've got Goldman Sachs, Morgan Stanley, Bank of America, JP Morgan, and Citibank on here, all of which have reported earnings already. The king there, no surprise, JP Morgan. And you can see the three columns. I know it's tough to read, but it's like orange, maybe terracotta, and then like a dark red, I'm guessing. Sucks being colorblind, I'll tell you. When you look at those three bars for each one, what it's doing is referencing Q2 performance for each of the last 3 years. So 2022 is in orange, 2023 is terracotta in the middle, and then the dark red is 2024. So all of which took a little bit of a step back last year, except for Bank of America, which was up all 3 years in a row. So that's probably the best trending looking chart. But as far as just sheer money being made, JP Morgan takes it at $7.8 billion with regards to investment banking revenue. And this all looks fine and dandy. Now let's throw on their trading revenues. Shifted a little bit, but this is the trading revenue for those firms over the same period of time. And we wonder why we've seen JP Morgan stock rally so much. Notice their trading revenue has gone up significantly, to the tune of almost $800 million just from trading revenues alone. And this, to me, represents the big concern in John's question about buying into banks. Where's the money coming from? You have investment banking aspects of it. You have the bank's own trading activities. You've got customer lending. And from all the stuff that I've been reading, that's where the problem lies. Traditional banks like your JP Morgan Chase, Bank of America, Wells Fargo are losing customers because customers like myself look at it and go, why would I keep my money in an account that's going to pay me 0.01% when I can move over to something like Ally Financial or SoFi or other banks that will give me, let's say, 4% for the exact same services that I need? I'm not the type of customer that needs to go into the bank all the time and need a teller. I used to, but now everything's electronic, so why bother? Why do I need those services? So not only are they losing customers, but more importantly, because they're keeping their rates so low, their interest that they're paying their customers are leaving because of that as well. So now they're starting to have to pay more money to their customers with regards to deposits on hand. And the documents are kind of showing that is eating into their bottom line numbers, which may not be a very good thing. The term for that is called... It's called net interest income. And net interest income is the difference between what the bank earns from making loans and paying out to depositors. So remember, banks are taking in your deposit, taking that cash, giving you a little bit of interest for that, and then taking that money and lending it out. That spread is called net interest income. So that margin for net interest income has been getting smaller and smaller and smaller and smaller, which again is going to hurt some of these banks. And again, that's not to say run away from the banks. It's just saying we have to look at it from all sides. And, banks are kind of built on the customer, right? With us, without customers, the banks wouldn't have any money to lend out. So they need us. Therefore, they have to start rewarding customers to stay there, or you're going to lose me as a customer because A, you're not paying me enough interest, and B, I can find alternatives that are even better. Is that money moving to money markets? It's moving to other firms. And again, Andreas, it's a good question. If we look at a company like, I don't know who owns Ally, SoFi is its own entity, but it wouldn't surprise me if you start to see acquisitions from JP Morgan buying banks like Ally. I have not looked into that. Heck, they may even be owned by a big bank right now. Therefore, keeping those losses in-house, so if the customers leave to go to Ally, oh, well, we own Ally too. It's kind of like the Anheuser-Busch fiasco a year or so ago, where everyone's like, oh, I'm not drinking Budweiser, I'm going to go drink Dos Equis. It's like, yeah, dummy, Dos Equis is owned by Anheuser-Busch, so congrats with that move. You're really sticking it to the man. Well, at least with this, we are getting higher interest rates by moving over to another bank. So I thought that this was somewhat of an interesting graph. It shows the banks, or at least these two charts here, have been showing banks performing rather well over the past 3 years. So I guess we need to take a quick look at, I thought I had a table in here, and I guess I just deleted the whole dang table. You gotta be kidding me, Merlin. This would blow my mind. I just spent a good hour building this stuff out for you guys, and the table I just built is somehow disappeared. That is fantastic, Merlin. Let me undo stuff here. Okay, I don't know why it disappeared, but here we go. Here's the table I built. Somehow I deleted that one. So this is just showing you real quick the last bank earnings starting on Friday of last week. So of course we start off with JP Chase, which beat earnings. They were supposed to make $4.19, came out at $4.40. Citibank was supposed to come out with $1.40. They came out at $1.52. Wells Fargo, $1.27. They came out at $1.33. So right away last Friday, we had this tone set of greatness for earnings for banks. It was nice. Goldman Sachs reporting yesterday. Yeah, Goldman Sachs was yesterday. They were supposed to make $8.52, came out at $8.62. BlackRock, $9.96. They came out at $10.36. Bank of America, 79 cents, came out at 83. The only one on this chart that's not losing in this battle, making money in this battle, is Charles Schwab. So Charles Schwab, which we'll look at here in just a second, came out with exactly the same at 73 cents, yet was down big on the day. I actually was debating going out and selling some puts on Charles Schwab, but I just don't think right now is the time to do that. So let's start down at the top of the list here. Let's look at JP Morgan, which I think is the king of kings when it comes to financial services companies. One thing that will always be in the pocket of JP Morgan, at least from my perspective, is JP Morgan is the only company that I know of that is actively using blockchain, decentralized open source blockchains to create their own blockchain internally at JP Morgan. No other bank has done that to my knowledge. That gives them a monstrous competitive advantage. And if JP Morgan does what I think they're going to do, it will just make JP Morgan much, much more powerful and have much greater earnings and control over kind of the financial services industry. So keep your eye on that one with regards to JP Morgan. Here's your chart of it. I'll put a cursor where we had our earnings last week. You can see the gap down on the earnings, which is kind of a surprise. And then really for the past two trading sessions, just been ballistic. Of course, these markets are ripping all across the board except for crude oil. Other than that, everything has just been screaming to the upside. Steve, you said you did sell a put on Schwab. Let's look at that one because it has me a little nervous with what they're saying, but that doesn't mean it's the end all be all. But I'll give you my 2 cents on that one. So this looks absolutely fantastic. And, I'm a believer of when everyone's going one direction, you have to be thinking the other. And as bullish as I am on JP Morgan, there's got to come a point here where we look at the chart of JP Morgan and say it's definitely due for a pullback, a retracement, some reprieve. I wanted to bring this out to the monthly time frame just so you can see how crazy JP Morgan has gone. And I think this should be evident of how dominant financial firms are around the world in all aspects of business. JP Morgan really just showing incredible. What was the negative news on? Are you talking on Schwab, Margaret? I'll get to that in a sec. I'm going to run through this list one by one. So we're going to go Schwab, JP Morgan, Citi, Wells Fargo, Goldman, BlackRock, Bank of America, and then I'll end on Schwab, and we'll get to that negative news. Okay, so cool. Well, let me know, Steve, when we get there. We'll look at that one in just a second. But JP Morgan, I mean, what's negative to say about this? I mean, it really doesn't look like there's anything bad that you can say about JP Morgan at this point, and it does feel like it wants to keep going higher. I just don't chase. I'm not one of those people that can continue to just go and buy all-time highs. That's not me, and it may be for other people. The truth is, a higher high leads to a higher high. So, I'm going to leave this one alone for right now. I don't like it at this price, but on a nice sell-off here, I might be interested because the rate cuts are going to be coming here as well. All right, so that was JP Morgan. Citibank, which also beat earnings, they beat by 12 cents, which is about an 8% beat on earnings. Here is Citigroup. The chart looks just as good. Well, maybe not just as good because Citibank is not at all-time highs, but it certainly has had a great run since those October lows. We do have these prior highs that are significantly higher than where we're at today. That high puts you somewhere around $83 on Citigroup, but that's long way away. It's $15 away from current, $16 away from current, $26 away from current levels. It's 26, 16. Sorry, math skills are off. So while I like Citigroup as well, just because the trend is your friend to the bend at the end, I'm not as I don't think Citibank is as much of a juggernaut as JP Morgan. All right, Wells Fargo, even after their ghost account openings, look at them from their earnings last Friday. They were getting trounced on Friday, and while I was in Vegas, I was sitting there going, God, I should sell some puts on this one. This is a long-term hold, and I just chickened out on it. It's been the story of this last couple months for me. Just all the stuff I've been wanting to sell puts on seems to just run away from me. But this has been a huge gap closure, happened in 3 days, all the way back, and then some, closing that gap on Wells Fargo. But what's that longer-term picture look like? Not as strong. You can see that over the past couple of months, it's actually started to make some lower lows and not looking as good. GS says, I've lost my final Bank of America shares a few weeks ago with covered calls. Well, we'll get to that. We've got a couple more before we get to Bank of America, but that's all right. You made some money on it. No, you didn't lose all of it. You still made some money, GS. But it beats a sharp stick in the eye or going the opposite direction on this bad boy. So Wells Fargo looks pretty good. Its all-time highs are still a ways away. That goes back to your high from 2018, excuse me. So still a ways to go for Wells Fargo to get back there, but they have done a marvelous recovery from their reputation debacle back in 2020, and this is COVID as well, but they've certainly recovered here pretty well. Let's go on to GS, Goldman Sachs. All right, so Goldman Sachs is another one, like all these we've looked at, that's just been absolutely going ballistic. I mean, clearly money is flowing into financials. There's no argument there, and it's a question of why. Maybe it was the earnings releases being leaked early. Remember, this earnings announcement that came out on Monday for Goldman Sachs had been in the pipeline within that company for quite some time. It's not like this just happened on one night. They're working on this for weeks on end to get the report ready and ready to release all the numbers official and make sure they're good and safe. Well, there you go. So Goldman Sachs looking fantastic as well. Goldman Sachs kind of fell out of favor with me. They used to be what we nicknamed government Sachs, where basically Goldman Sachs, it appears to have had somebody connected from Goldman Sachs to high-level banking or political offices in just about every country around the world. It's like a fraternity. That's why they call it government Sachs. So you can look at the Bank of Canada has former Goldman Sachs employees at it. You have political offices, and central banks around the world have former Goldman Sachs employees working at it, which made them a juggernaut and gave them a huge competitive advantage. Now, the other part here is BlackRock, which we'll get to after this. Well, let's just go to BlackRock now. BLK. So BlackRock has kind of overtaken Goldman Sachs as, government Sachs. They're a bit more entrenched around the world, but over the past, couple of years, it has not been all roses for BlackRock. You can see that it had that big sell-off back in 2021, as some financial firms did, and now has been traversing to the upside. I'll go back to the daily here, and you can see that really, just as of maybe today, it's broken out of this 5-6 months range that it's been stuck in. Really been stuck sideways for quite some time. So not that great. But the good news is you're back to highs for BlackRock on this breakout. Now I got two more. Yes, I am rushing because I got a bunch of other stuff we want to get to today. There is your Bank of America chart, which I could see why you got your calls taken away from you. I mean, this thing, you just don't expect it to move this much. You expect it to have a nice trend, but this was kind of crazy, particularly with what happened out there today when it just had a 5% jump to the upside on their earnings. So again, we showed their earnings. They only beat by 4 cents per share, but all in all, a nice run for them. Let's see. GS, a few weeks ago, you lost those covered calls. Oh, bummer, man, especially because it's been on such a nice run. Again, looking at the picture here, you have a long way to go back till you get to those peaks that it has from 2022. That was up over $50, and we're currently at 44, so you still got a ways to go. I like to look at the longer-term picture here. And that brings us all the way back to those highs of 2007. We're not even close to those. We got a long ways to get there. That's right around that $55 mark. So another $11 from current value. Bank of America will beat all-time highs yet again. So So far, everything looking fantastic on the financial front. I got one more here, which is the Charles Schwab, SCHW. So Charles Schwab's chart looking very different. Notice it doesn't have that trend line that has just been screaming to the upside. It's not making it through all-time highs. And if I go back here to the weekly time frame, it does look fine, but we're nowhere near those highs that we saw back in February of 2022, which puts us around, $90 per share, and we're currently at 67. So you got $23 to make it to those all-time highs again. That's quite a jaunt away. Now, what was the news that caused the nice gap down today? It was down 10.18% today. I did look at selling some puts on this. I just didn't feel comfortable with it. The news was that they need to start slimming down their operations. They're talking about shrinking their company over the years, which it's actually good long term, right? When you shrink a company, that generally means you're going to be going through every department, every desk, and saying, all right, what's Kevin do here, right? What is Kevin's job? All right, Kevin does this. Okay, what does he, is his salary commensurate to his reward to the company? If we're paying the guy $100,000 a year and we only feel like we're getting $50,000 worth of output, boot it later, Kevin. Oh, here's Janice. Janice is making $130, but she's contributed about $1 million to our bottom line. All right, we're keeping her. So that type of thing's going to happen. And generally what you do is you get rid of the low-lying fruit that's not really helping your company out. It's a time to purge your company. They were citing kind of what I was talking about earlier, which is that differential in net interest income. So Charles Schwab is having to pay out more to customers to keep them from an interest rate perspective, and they're losing on their bond portfolio. Remember, those bonds have been what hurt Signature Valley Bank, Silicon Valley Bank, and First Republic all went under predominantly because of bad loans that they were upside down on. There was a run on the bank from their customers. They were forced to liquidate those bonds at a loss and therefore put them in a very bad financial position. And a lot of these banks are still struggling under the weight of that inverted yield curve, right? If that yield curve were to revert back to normal, then some of these banks would probably be okay and get back on track. But now they're having to sell some of these underwater bonds to pay interest to customers, and it's draining them. So Charles Schwab cited that in their statements, and that's why you saw the big drop. Now, I did see a comment in here, talk about selling some Charles Schwab puts. That was from Steve. He says, I think it was 60-day put, the 60 put 90 days out. All right, so let's go look at that here real quick and see where that would leave us. So I'm not sure how much premium you got. My rule is generally I won't sell more than 30 days. So you're going, you said 9 days out, or did you mean 90 days out, Steve? Because if you did 9 days, that's pretty short term. That's fine. Yeah, they bought them a while back. They just integrated them. So if you bought the $69 put, I'm pretty sure oh, wow. So the $60 put in 9 days, you're going to be fine there. I don't see that being an issue, but I can't imagine you got a lot of premium on that. I find that pretty incredible to get 45 cents in 9 days. Wow. Wow. Okay. Well, I think you're safe on that one. Yeah. I would think that to get 45 cents, you'd have to go out something like 90 days because, that would equate to another $18 drop from current levels. That's pretty significant. I can't imagine the premium being that high, but all right, you got it. So lucky you. Let's see. Yeah, that'd have to drop another 25% in 9 days. Yeah, I don't think that would work. Okay, good, Steve. Steve's in the same camp. No more than 90 days out. Schwab, I guess, taking on all the employees, put them in a position to skim down. Exactly. I like the TD employees better than the Schwab guys. Don't tell Scott McCormick that, okay? You'll get yourself in trouble, Lisa. That was his old employer. No, I'm kidding. Okay, that changes things a little bit, Steve. Thank you. I was like, man, you got the $50 strikes for that price? So 66, that's more like it. Okay. And it's funny because that's kind of where I was thinking as well. I was thinking at this little tail right here. Get rid of that. So there you go. All right. Then these numbers make sense, Steve. You had me kind of confused there. I was like, what the heck? There's no way you got 45 cents going 25% of the money. That'd be crazy. Anyway, that one's not bad. It's only 9 days out. You just have to, you do have some more financial firms reporting, and it is a little concerning that it fell this far this fast. And remember, every other financial firm was holding their own. It's really the concern that this may trickle down. So I personally, what I will do is I'm going to wait here, even though you got to capitalize on the fear, right, Steve? you basically had all those people panicking and looking to buy protection. You're like, all right, I'll sell the $66 puts. Why not? I think it's going to go a little bit lower here just because the pain and the overall talk track about Schwab was much worse than it was for Bank of America, BlackRock, and other financial firms we looked at. That said, I think Schwab will be absolutely fine. To Margaret's point, or it wasn't Margaret's point, it was to Lisa's point. They've got a whole bunch of employees that are duplications and maybe even triplicates, right? You have Ameritrade and you have Schwab merging. There's a lot of overlap there. So there could be significant layoffs going on there, which would increase the bottom line profits for Charles Schwab. I think that's going to be a good thing. I just don't know if it's going to be impacting it right now. Maybe in 6 months or a year, we start to see a nice surge up. So I'm going to wait myself and go a little bit lower. I'll follow this one over the next week or so to see what the next couple weeks bring Charles Schwab. But, the question being, is this the banking bonanza? Well, they're obviously making pretty damn good money, but it looks like a lot of it's coming from trading operations. That's that chart I showed you earlier that showed, almost all these banks have increased their trading significantly. So what does that mean long term? If I look at a bank, as someone who's, I got my finance degree, the bank should represent stability to me. So if I invest in a bank, I have this belief that a bank is going to be rather stable. They're not going to be making risky investments. They're going to be basically taking deposits and buying bonds of those earning yield. That's a small portion of their business. Then it goes to investment banking. Could they get into shady deals and do bad things? Yes. The trading side, could you have a fat finger or some trader who does something horrible? We've seen that countless times throughout the market history. So if banks are relying more on trading revenue to keep themselves afloat, and that seems where that curve is turning right now, then that makes me a little nervous about these banks because you're taking chances that you may not have normally taken. In a market environment like this, where all of a sudden you have, rates look like they're going to get cut this year, some people anticipating 3%, and I'll show you that chart here in just a second, that would tell me that there will most likely be a catalyst to the upside, right? Dropping rates means capital infusion for the markets, and that could be good. Question is, when do we get there, and how severe is the reaction to it? I think that's pricing into these banks right now. I think right now the banks are pricing in rate cuts, which will shorten the short end of the yield curve and may actually start to push that long end up because we need to get that yield curve flattened, but you got to start by lowering the short end of the yield curve, and that would be a step towards that. Nope, they're trading the hell out of your money. I know, right? All over they are. And that should make people nervous. They should make people nervous. Are you going to sell puts on XLF? Not yet. Let's look at that chart. So you talk about financials, right? Another area we could buy XLF. I'm not selling puts. There's no premium on these, right, Margaret? I mean, this thing is just ripping to all-time highs. Well, is it not all-time? Yeah, it actually did break through all-time highs. Is there enough premium on that one to make me happy? No, I'm going to wait for a sell-off in this one. And, if I miss it, I'll wait. I'll look for other things. I saw utilities dropping here rather quickly, so maybe utilities presents itself as a better opportunity. I personally think that what you're witnessing is the pricing in of more rate cuts than anticipated. This looks like multiple rate cuts are expected for the end of the year, and that brings in a different I had a graphic for this one today. That brings in a different... Oh, there's one graphic. So, we talk about the banking opportunities here. I also had AI show me I said, show me a bank that's shrinking. And it didn't really do a good job. But, this is kind of what I think you're going to see with Schwab is it's going to be a big building that might get shrunk down into a smaller building. With the merger between Ameritrade and Schwab, a lot of are going to go away. A lot of employees are going to disappear there, and that's unfortunate. Tom said duplicates and triplicates occur at higher levels at Schwab. They have a proportional number of accounts and alum to employees. You cut redundant C-level VPs, directors, and other managers. Get rid of them too. Get rid of them. This would be a time where you start to... And honestly, if I was running Schwab at this time and I had Ameritrade come in, if I'm the CEO of Schwab, this is awesome. This is like one of the best opportunities because now I can sit down and go, okay, let's look at the VP of marketing at Schwab. Let's look at the VP of marketing for Ameritrade. I'm going to sit down and I'm going to get very intimate with both of those people and figure out exactly what skill sets they bring to the table. And I would probably be okay dumping my CEO or chief marketing officer and going with Ameritrades. Find the best assets from those. But you're right. Now is that that time when I guess they have carte blanche to redo their structure, get rid of the fluff in the company. Because if you get rid of some executives that maybe they're too long and people are like, oh, you're getting rid of the loyalty, it kind of gets all wrapped up in the mass layoff of employees anyway. So I do think long term, this is great for Schwab. I think this is really good for Schwab, but I don't like the chart right now. Let's go. I don't like the chart right now, and I'll probably wait a little bit longer to pull the trigger on this one. If it drifts lower, great. But no, not selling puts on XLF. If anything, I'd buy directionally, but not right now. I mean, I have no reason to it, right? I've got no all-time highs. I have no supply levels to go back to and reference, so it's hard. It would be hard to go short on XLF. You'd really be taking a high risk there because that trend is just absolutely super strong right now. You know, it looks like a lot like this graphic right here. And that's just kind of me watching it go up. Me watching that market go up, and I'm on the sidelines. I did put the small cap surge on here because I would be remiss if we didn't talk about this as well. That Russell 2000 not only continuing its trend, but screaming to the upside, directly up to that overhead supply level we'd mapped out. You can see here it goes right to this high from back on January 3rd of this year. So we are officially at highs for the year for the Russell 2000, but that momentum is just incredible. And we look at the volume on here, you see the last 3 days have had significant volume. And there was a question that came through about, well, how do you know that money's flowing from one market into another? Look at the chart. If I go to S&P is still trending, but it has nowhere near the ballistic moves. If I look at the Dow, which is actually a pretty good looking chart too. Let's go to my Dow. All right. So money's moving out of the S&P because they're not getting that bigger move like this, but for some reason it's going into the Dow, which I don't understand, and not into the NASDAQ. Right? The last 3 days, while these markets have been screaming for the Russell to the upside, NASDAQ has been idle. I mean, really, we've had 3 days of pretty much sideways action here on the NASDAQ. GS, that's me with BAC. Well, don't worry about it, brother. It's okay. You know, when you're standing there watching something run, the only solace you have is to just remember and tell yourself there's always something else. You know, you don't want to look at the ones that got away and just go, oh, shoulda, coulda, woulda. It doesn't matter. There's nothing you can do about it. Don't kick yourself over it. It is what it is. Yeah, obviously RTY is going to be screaming up as well, though there's your RTY and IWM, but that's what we're showing you there, Lisa. There's the Russell. Phenomenal move. I mean, I would not have expected this to have that much of an impactful move. We did mention that if it breaks out of this long sideways range, you typically get a big move, but boy, this is really just way bigger than I thought it would be. Keep your eye on Russell tomorrow. I think it's getting long in the tooth. I mean, this 3-day run of, let's measure the percentage here. This is like annual rates of return type numbers that happen in 4 days. 11.51% gain for the Russell in 4 trading sessions. That is pretty unbelievable. Right now, it's just the hottest, shiniest object in town, and everybody's got to have it because it's been sideways for so long and all of a sudden broke out. We are at that supply zone. Just keep that in mind. If this one gets broken, then I think you're pretty much off to the races and going to be back towards all-time highs here in a short period of time. So there could be definitely more upside move here, but I would really kind of watch this. Steve says, I've never seen the Russell move like this in 3 days. Neither have I. I have to the downside, actually, but not to the upside. I mean, we saw everything like this back here in 2020 was just falling like a rock and lock limit downs, which is just insane. But yeah, it's nature of the market. You know, I've had a few people ask me, why is this happening? Like, I can't tell you. I don't know. It's just happening. For whatever reason, maybe it's collusion. Maybe it's institutions saying, hey, this is Merlin from Goldman Sachs. Oh, yay, this is Bob from Merrill Lynch. Hey, let's tell you what. How about you drop $50 million and buy IWM just as much as you can. Just load the boat, 50 mil. All right, and we'll get like 10, 15 people. It's easy to get a pop, and then it becomes the piece that makes all the headlines. I mean, what was all the headlines today? Russell. It wasn't S&P, NASDAQ, or Dow. It was Russell. It's been for the last 2 days. Phenomenal. The rotation trade is finally coming true. Yep, and we'll see. You know, I think that the reason you're seeing this small cap surge, like this graphic shows you here, is anticipation of rates lowering. If you run back to the start of this, this obviously started on Thursday, so it had nothing to do with Trump. But now, it does appear to me, and just the things that I'm reading, and who knows if I'm being fed misinformation, which could easily be happening. The popularity and support for Trump has grown since that assassination part, and maybe people are pricing in the benefit that he's going to have on these markets. That could be part of it. Who knows exactly why it's moving into IWM? Maybe it's just saying, hey, if interest rates get lowered, typically that means more merger and acquisitions. Small caps are M&A targets. Therefore, we should see more M&A, more people buying small caps. Let's buy those now while we can because they'll be worth more in a few months. So that's another belief system out there. So let's go to this graphic right here, which will bring up our wonderful chart of rate cuts. So someone asked me, so Merlin, when do you think the next rate cut is going to happen or the rate cut will happen? That's a no-brainer. For me, it's pretty much priced in. I would say, in my skeptic belief, I would say it's probably a 75% chance. If we get a rate cut for political purposes, it's September, period. Because you can't do it in November. Maybe you do as the icing on the cake, but I think you want to have that impact juice the markets. The last couple of months, the last 6 weeks before the election are juicy and fat, nice, big green candles. That's what you want your constituents and the population to see. Well, let's verify that because right now, the end of July, there's only a 6.7% chance of a rate cut. Not going to happen. We need more data. If the data continues to come in as it has, we are going to see, and the markets have priced this in, there's already a 90% chance of a 25 basis point cut in September. So that totally makes sense to me. It's the one right before the election that gives enough time for it to impact the markets. There's actually a 9.3% chance of 2 rate cuts by then, but I don't think so. I think you'll get 1. Now, how does it look for the end of the year? Well, let's go to November 7th, which is right around election time for the U.S. They're already pricing in 2 rate cuts at 60% chance of that. And by the end of the year, the big number is 55% that we'll have 3 rate cuts by the end of the year. I don't think we'll have 3 rate cuts personally. I think we'll have 1, maybe 2 on a long shot. Okay? Let's see. Rotation. So those are kind of your big headline pieces. What else did I have to talk about? There were some questions on banking issues. Oh, I asked AI to show me a financial firm slimming down. You're going to love this graphic. This is the picture of a financial firm slimming down, and it's 3 pigs sitting in what appears to be a bank or something. I don't know, but I thought this was Charles Schwab needing to trim the fat. I think I said trim the fat. This is the picture they gave to me. Oh, I love that. Oliver says, beware, September is supposed to be the worst trading month. Not supposed to. It statistically is the worst trading month. It used to be the only negative month, by the way. Going back in the 1950s, September was the only month that was negative, and I believe that has now shifted. I believe every month average is positive since the 1950s. So, because we've had some pretty good. I'll have to check and verify that one, but there you go. So let's see. I had small cap surge. Talk about Schwab. I had some questions I got answered. All right, cool. I've got everything I need to get covered. Let's see. Technician JD said thoughts on Nike. Yes. This was it's on my list. I have a list of stuff right now that I'm interested in buying. Obviously, Tesla's on that list. Nvidia, Boeing is on that list, and then you have NKE. Their earnings that happened, a couple weeks ago were bad, real bad. And I'm going to put this out to a weekly time frame just so we can see the longer term picture here on Nike. Nike, I don't know how you pronounce it. And I'm going to just put a line right across the extreme low there, that shock factor bounce low right here, which is $60 even. So I don't know if it's going to get to 60, but that becomes a very, interesting point for me as an area of interest. So let's go zoom out here so I can get that. We'll take some volume off here. And how far do we have to go down to get to $60 from current levels on Nike? That is a 17.28% slide. Now it was up 2% today. We can go back to our daily here. The thing that the problem I have with Nike right now is just look at the trend. Right, you've got a gap down, and even if we went back to here, let's say we did this one. You tell me, Technician JD, if you had this gap down right here, what would you be looking at? You're probably saying, oh, maybe I'll go out to, maybe this low here at 104. Maybe you go to this swing low here, it's at $97, or maybe even this, or maybe in the gap down here at $89, right, to selling puts. Well, we just kept drifting lower and lower and lower and just kept on going, and now you are down below that. So I haven't seen anything that would tell me this trend is going to reverse. So if we continue to slide on this one, if I can get enough premium and sell those 60s, I'd be a happy buyer of Nike at 60. I think we'd all agree Nike's not going away. It's not going to disappear. Way too entrenched. I mean, I was just at the Summer League in Las Vegas watching a couple of basketball games there, and I mean, they almost all wear Nikes. That's just the shoe. It's the shoe. So I think if you can find a company like this at a good deep discount, great, buy it for the long haul. But I just have not seen it turn the corner. I haven't seen that higher high, and nothing yet has convinced me that I want to be buying it. So I'm just kind of letting it drift lower and lower and lower here. Will I miss the bottom? Probably. But if I get to a point where I get enough premium to sell some puts and a number I'm happy with, I will do that. All right, Tom says, I tracked Charles Schwab job postings before the big job cut 6 months ago. They had 200. Now they have 308. Not cutting at the worker B level. So they're cutting. So what you're saying, Tom, is it's more management and C level type stuff. So the worker bees, the low-lying fruit, because right now, I mean, there's plenty of people who like to go work for Charles Schwab. I mean, I don't really want to go work for the dark side, but the one thing these nice financial firms offer you, great benefits, typically great investment plans and 401k choices like that. All right. Of course, Steve, I will check out Lululemon for you. Anyway, let me finish up with Nike. So again, I'm not interested right now. I want to wait. I just don't think that this pain is finished yet. And if it continues lower, fine. Just gives me an opportunity to buy at a lower price. Real quickly, let's go check out Boeing, which really hasn't done much. I kind of really expected this to slowly trend up, but secretly I want it to sell off. As I told you, that 140 is a level I would just love to own Boeing at. I do not believe they will ever disappear. They're way too essential to the United States. So if they can get past this trivial little slap on the wrist that they just got from the Justice Department, they should be totally fine and start to move back to the upside. All right, Lulu. Ooh, lordy. I would pretty much put this in the same exact position as the Nike chart we just looked at, right? You've got nothing but lower lows, lower highs. Hasn't bottomed, hasn't turned, hasn't made a higher high. I mean, right now, this to me says stay short. You could put moving average of any time frame on here. You guys, any time frame, and it'll tell you to what? Stay short. Let me just prove that point. I like that point. For some reason, my mouse is acting all weird today. Sorry if I seem glitchy over here. So here's a simple moving average. This would appear to me to probably be the 50. What? Oh, that's the 100. Okay, there's the 100. Let's go put the 50 on here. There's your 50. Oh, I mean, it doesn't really matter what time frame you're looking at. Here's your 20. Even if you went to something as small as, let's say, the 10, which most people aren't going to use that small, it's still pointing down and not curling yet. So you've really got no reason to think about going long on Lululemon at this point. Now let's go back and do what we did on the other charts, which is I'm going to put a line right where we're at right now, and then get rid of that and just scroll over here and see what does it look like. So you're right in the little dashed red line here. There really isn't any strong demand zones down here. Let me get rid of that blue line. I just find it annoying. If you notice that all this chop, I really would have a hard time picking out a strong demand zone down here. Personally, I don't think that they're there. I just don't. Yeah, I don't think they're there. So where would I be interested in? Just the extremes. And that puts me down here somewhere around 250. Now we're at 290 right now. Could it get to 250? Absolutely. But if that 250 level breaks, it looks like there's a potential for a significant decline in Lululemon. I do go to the gym. You're not going to catch me in Lululemon clothes. Spending $70 to $150 for a pair of, gym shorts is absurd. I have these awesome ones that fit me perfect, and they do everything I want them to do from a short perspective. And I got a 2-pack for $29. So, I think you'll always have those people who buy Lululemon. But, from my perspective, if you are someone who's smart with money and you understand that it's something we don't have infinite supplies of, why the hell are you buying Lululemon? Why are you spending 5 to 10 times as much for something to be cool and have a little inverted horseshoe looking logo on it that, makes you look cool at the gym. I don't care. I'm not going to the gym for fashion contests. I'm going there to work out and sweat and look ugly, actually. So who cares what I'm wearing? So yeah, I'm really not a fan of Lululemon. I'm not a buyer of Lululemon at any price. So even if this thing continues to drop, it's just a company I don't like. I'm just not a fan of. So Nike I would buy, even though the chart looks very similar to this, because I believe Nike is a much more versatile brand. Lululemon, I never really understood the hype personally, and I would not be a buyer of Lululemon at any price. But that's just my own dislike of it. I'm sure some of you probably love Lululemon, and that's great, but this just doesn't line up with my interest or anything like that. So sorry, Steve. That's probably not what you wanted to hear. And these customers are going to Walmart. Wait, what did you say there? Let's go. I go to stores of Nike, and it's still packed, so it's really innovating. And yep. And for them, stop being political. That's what these companies need to do. They all need to stop making political statements. Stop making political statements and polarizing your audience, polarizing your customers. It's just shocking how one little thing can make your customers turn on you, hate you, and become from your best customers to the one that will slander you at every chance online. Just stay out of politics. Just sell your clothing, sell your shoes, your hats, your beer, whatever. Just don't make political statements. And this is interesting. We bring that up. There was a question that I saw today that said, it was from Elon Musk's parody account. And he said, do you think that I should have come out politically and said what I did about Trump and supported Trump, or should I just have shut up and not done a thing? And personally, I think he should have just shut up and not done anything, because what he's done is he is now two things. He's going to take a huge segment. Mind you, he's the most followed person on Twitter, X, whatever. He is the most followed. He has the most influence and reach of anybody on Twitter. By him making that claim, a lot of people who may, have not supported Trump may now become supporters of Trump. So indirectly, he's going to be adding a lot of extra firepower to Trump. Another side effect of this for Elon Musk is you're going to get a lot of people who, love Trump and they're like, great, Elon, fantastic. But you're going to get some people that hate Trump and despise him at all costs. And they're now going to not want to buy Teslas. They're not going to want to, do anything with Elon Musk-based products because of that simple gesture. I believe you support whoever you want, and some people are very proud of who they support. I'd rather not have anybody dislike me because of my beliefs or who I support. So at least you won't say anything. Let's see. Historically, the market dumps after the first rate cut. How would this time be different, because the data would theoretically still be good? Chase, that's why the belief, at least what I think, is you're going to see the market have a big surge because the data is already good. Now, remember, the impact of these rate cuts takes between 9 and 18 months. There's no scientific result of that. It's just economic data. Historically, it takes some time for a rate cut to get all the way through to the bottom line of CPI and GDP and retail sales, right? It takes some time for that to get to the bottom line. And my mentor back in the late 90s, his thing was always 9 to 18 months, and that feels about right from seeing the impacts of these. So initially, you're probably going to see a jump in the markets because, you have more cash coming in. My guess is you'll see a jump, and then it'll slowly start to taper off. And after a while, it'll start to pick back up again once the economic data gets better and better and better. Good, Steve. Well, it is interesting, especially if you're on social media. Like, I've had friends from high school that, weird, in high school, they're always very middle of the road, which I actually appreciated that about the school I went to. It's kind of a country town, so I really thought it would be more rednecks and racist, but it really wasn't. And, most of my friends in school were middle of the road. Maybe it's because we just weren't that into politics. And now all of a sudden, I'm watching this extremism happen, and I believe a large part of that's due to social media and the influence of social media. But man, I have one friend in particular that if you say you're anything with a blue flag, he will just start slamming you. And it's funny watching his friends decline because of those polarized views. But yeah, I think we should all just keep our thoughts to ourselves. Unless you're having a discussion with somebody that is not going to take it personally, or, I have a couple good friends that we're like-minded. We're kind of middle of the ground, maybe slightly one side or the other, but I've mentioned with you guys before, I have no problem voting for a Democrat. I have no problem voting for a Republican if their views are in line with what I believe is best for this country. Not for me. It's about the country and this country as a whole, not for my own personal interest. Although I would love it if every candidate would support crypto, but they're not. Damn it, support crypto, damn it. Legalize it. Big Eb says it won't be different, Chase. Yeah, I don't. You think it'll have a big sell-off and rally? Maybe. We'll wait and see. I'm not really clear. Elon should give Trump a free Tesla. No, what he should, what would be funny? That's actually funny you say that, Margaret. He should give him a Cybertruck because a Cybertruck's bulletproof, right? It's got bulletproof glass. That would be kind of ironic. Oh, here you go. Drive around in this one, Mr. Trump. Okay. Sorry. Before I get in trouble, let's move on from that. I don't know if you've been watching some of the footage of the... there were people standing there going, there's a guy on the roof with a gun to the police, like literally 2.5 minutes before this guy shot. They're pointing at the roof going, look, there it is. He's right there. Just insane. Crazy. All right, let's look at what's going to be happening for Wednesday. For the U.S., you got a lot of mild announcements. Nothing that's really moving. However, we did see FOMC member speak today, and he was saying possibility of more rate cuts. This Kugler guy. Kugler. I don't even know if it's a guy or a girl. I don't know who Kugler is. Kugler was saying, look, there's potential for several rate cuts by the end of the year. That was a market mover. I think that was a big piece for the markets today. It caused a little bit of a juice to the system. So again, I think we might be overpricing in some of these rate cuts. Tomorrow, notice here on the screen, you've got two FOMC members speaking. These are both before market open. You've got Barkin and Waller will be speaking. Let's see if they share the same views as Kugler. You also have industrial production, building permits, housing starts. You have capacity utilization rate, crude oil inventories. The beige book is always entertaining. So there's a lot of big stuff happening for the U.S. Not say big stuff, but medium type announcements happening. But really, these FOMC members can cause this market to go crazy at any moment in time. So be wary of that one. All right, let's go to your earnings calendar, which I do not have up and ready yet. So let me bring that one up. That is for Wednesday the 17th. We have more names coming out tomorrow, and this is probably one of the more diversified days we've seen so far for earnings week, and that is Johnson & Johnson. Well, let me go through the before market opens. So before these markets open, you're going to have Johnson & Johnson, Synchrony Financial, U.S. Bancorp, and Citizens Financial Group. After market close is where you get a lot of big names as well. You have Kinder Morgan, you have Alcoa, you have United Airlines, you have Crown Castle, you have Discovery Financial Services, Steel Dynamics. So there's a few. Really, the big one for this week is going to be on Thursday with Netflix coming out. So we'll see how that ultimately will move maybe our tech sector. But that's your economic announcements and earnings for the week. Let's see. President Trump could trade in a golf cart for a Tesla, assuring that Tesla has an 18-hole range. Oh, God. Good one, Tom. I don't know if you noticed this today. Also, Elon Musk said he's now pulling SpaceX out of California. Oh, man. I love watching the SpaceX launches. Oh, Margaret, I'll get to Hood in a second. I love watching the SpaceX launches, but, California, we've got some really weird policies, and Gavin Newsom signed one in today that Elon Musk just had enough with, and he says, I'm pulling it out. He's moving SpaceX to Texas, so pretty much he's got all of his businesses in Texas. It's California can sing that song, right? All my exes live in Texas. We've lost SpaceX, we've lost Tesla. We got a lot more than that going to Texas because of Elon Musk, but thought that was pretty funny. I sense a beer coming my way, Merlin. Oh, looking forward to it, my friend. Looking forward. Been too long. Looking forward to it. Although you're buying, so that's fine. Let's see. Let's go look at Hood for Margaret here as we wrap up the show for today. HOOD. Wow. That is impressive. Now, I don't know what they're doing to get accounts back like this. Really. Margaret, you were bullish on Hood a while back, and I kept saying, nope, it hasn't gone anywhere. But what have we done? Okay, let's be fair, because I know a lot of you be like, Merlin, you missed the whole boat. Well, my rules are, it's got to start making new highs. And we would have seen that happen back in here. I mean, at the latest, you're talking about breaking through highs in February of this year. And that was right around that $12 to $14 mark. At this point, what can you say negative about this one, Margaret? It looks great, even though I don't like Robinhood. I'm not a big fan of their model, sale of order flow. They have opened up to more markets. They have offered some new products. They are now doing a major ad campaign promoting deposit bonuses. So maybe they're bringing in big accounts from people. Maybe that's the driver here. But wow, that is a great chart. I mean, back in 2023, Robinhood was down at $8, and here we are now at $24. Pretty impressive run here for. Did we lose the Super Bowl? Oh yeah, we lost the Super Bowl, meaning we were in it and we lost it. Yeah. All my SpaceX is living. I started a trend there. That was a good one. Yeah, right now, Margaret, if you are in Hood, you stay. I mean, look, until this thing starts making new lows, stay long. Regardless of my belief system in it, or the craziness of what's happening, looks great. Where do we get to on Hood? Does it end up jumping back up to the 30, 40, 50 mark? Heck if I know. I wouldn't think so based off the model, but they're clearly doing something right. Let's see what their earnings numbers look like since October of last year. So they lost 9 cents was their final number. They made 3 cents. They made 18. So the trend is clearly up on their earnings, and their next earnings announcement is going to be on the August 7th is their next earnings announcement, and they're expected to make 14 cents. So earnings have turned that corner, and now it feels like they've just gone up and up and up and up. For the life of me, I cannot figure out how to trade on the Hood platform. Can't do anything. Nope, their charts are horrible. Guess what's designed for much? It's designed for people who do not understand platforms. So it's really that gateway into financial markets. So I've talked to a lot of people that have very little amount of money, $100, $1,000, and they're like, "Oh, I'm a Robinhood trader." It's like, hey, you got $100, bud. Let's not talk about how great of a trader you are. But they do have some interesting tools, like you can see what's the hottest thing trading on Robinhood. Track that, because the herd mentality is a real thing. And maybe they're just bringing in more and more business. But I would think it has to do with their product expansion and trading more and more good products, as well as bringing in more money. Because AUM, assets under management, is a pretty big factor in a price appreciation. Even Denny was down back to near highs. Oops, DENN. Denny's. So here's one of the reasons. And again, Michael, you are the master of buying things that are in the most atrocious downtrends possible. You must have a filter or a scanner that says, show me stocks on the worst downtrend that you can find and make an alert. So with Denny's, two things. Number one, if I go back to the simple rules, you want it for it to be breaking some highs. It's doing that right now, right? It's breaking the high from, broke out of here, so it has double bottomed. It's now breaking through. So based off that, your target actually says you should be somewhere right around $8 on Denny's. You're right in that overhead supply right now. After that, it looks like $8 plus. Great. My big problem with Denny's is it's Denny's. Does anybody else disagree? How many of you agree with me? The problem with Denny's is the fact that it's Denny's. Back in the 80s, 90s, Denny's was like the place to go. Then it became an IHOP. Now it's, was it Black Bear Diner or something much bigger. I'm not liking, I couldn't do it. So, Michael, if this was a normal stock, let's say this was, I don't know, anything other than Denny's or Lululemon, and it looked like this, I'd actually say buy it. And the reason is it feels like it has turned the corner. You've made some higher highs. It doesn't mean that it's going to rip from here, but at least it's stopped falling. So this is actually, technically, if I strip out the Denny's name, let's start there, Michael. Forget that this is Denny's. If I look at this, I actually like this chart. Now, it doesn't mean I'm loading the boat right now. You're at a level right now, which is right here. Well, we just broke today, 751. You're closed at 751 today. So you're literally at the dead high from the peak of June 3rd. This looks good. If you get above that, it's so you start adding into that position and maybe start building a bigger position. But I personally can't get over the fact that this is Denny's and it's not a place I like to eat. I've had some fun memories at Denny's back in the day, but if I want overly greasy eggs, hash browns that are soggy as can be, and some waitress that smells like a cigarette, Denny's is where I'm going. But I'm not into that anymore. I remember Denny's promoting a breakfast for one that would feed a family of 6. Not anymore. Inflation's got to that one. I might go there on my birthday for a free breakfast. Let's be honest. I'll take some stomach pains for a free breakfast. That's for sure. All right, let me wrap up here. But I like that one. That's okay. Oh, you're going for the dividends play? Now you got Papa John's was the other one that you wanted. And again, same chart, right? I would prefer Papa John's over Denny's just because I like the company better, but it really hasn't done anything yet. We have not broken out here. Gia says, I'll take that shot at Denny at 20. At 20? That's a bit of a waste. I just don't understand Chipotle either. Well, there's a part of the reason is the number of shares of Chipotle, right? Everybody looks at CMG. We did this one the other day. CMG has very few shares out there, and then it did its split, right? And once it did its split, look what happened. It's been falling ever since. This is what NVIDIA should have done, and it hasn't. So CMG is going to present a buying opportunity. Why is it doing so well? Look, Chipotle is one of the healthier alternatives from a fast food perspective. You can get in and out, and you're eating a relatively healthy meal. Now, for those of you who are unhealthy and want to save money, where should you go? I'm going to go long here today. Damn you all. If you are unhealthy and don't care about your diet, where's the best bang for your buck right now? You guys tell me. I want you to type in the chat. Where is the best bang for your buck right now to go and get a full meal, drink and food and everything? Best deal in town. Where is it? I'll tell you this. It's not on the menu. I actually went there. I've been there twice in the past 3 weeks, maybe. Shh, let's not tell anybody. But I've been there twice in the last 3 weeks because of bang for your buck. You cannot beat the deal that this company is offering. I'm curious what you guys think. Popeyes? Nope. Not dollar-wise bang for your buck. Lisa says no clue. She's like, I cook at home. What else? You guys are cracking me up here. Waffle House. We don't have Waffle Houses here, so I couldn't tell you that. Margaret's got it. You cannot beat McDonald's $5 meal. Here's the thing. You have to ask for it. You can't, it's not on the menu. There is no button to click for the value meal. So you have to go in there and say, I'd like the $5 value meal. And what you get is you get a chicken sandwich, you get French fries, you get 4 chicken McNuggets, and you get a drink for $5. Oh, all over my, okay, you might have us at Costco. That hot dog and drink is hard to beat. But McDonald's deal is pretty impressive. However, you're just dealing with chemicals and fat in McDonald's. Chipotle, a burrito, a bowl, right? A chicken bowl is going to cost me, I think, $8-9 out the door. But it's a ton of food, and it's real food. It's not some unidentifiable parts of a chicken that have been compressed in a little brick. I have no idea. Never eat that crap. Waffle House says, hi, I'm mostly dead here. Let's see. Nice. Steak and lobster in the Sizzler. They still have Sizzlers. Wendy's. We got some fast food eaters here. The fast food deal that's unbeatable outside of Costco, which that price has been there since the 80s, is McDonald's. So check it out. You have to order it. You say the value meal. It's not on the menu. They don't want to sell it. They announced it to get people to go there and forget they're going there for the value meal. Because if you say, give me a Happy Meal, it's not $5. It's like $12. Merlin, you went to Mickey D's twice last week. No, not last week. It's like in the last 3 weeks. Last 3 weeks. I like cooking. There's just something guilty about the chicken nuggets. That's that guilty thing, the hot mustard. Margaret says Chipotle loves salt. And that may be their biggest drawback because they're using a little bit too much salt. But, if I had to look at those charts we just talked about, let's bring up those 3. If you're going to tell me there's one that you want to buy here, I'm going to try to buy CMG because it's always packed. Their food is relatively decent. I haven't looked how many shares are outstanding. If I look at PZZA, Papa John's, no. Until it starts making some higher highs, they got problems. If I look at DNN, Denny's, same thing. Although it's just starting to turn the corner here. So this Denny's does look like it has potential from a pure technical perspective. It's Denny's. I can't deal with it. All right, I went long today, guys. Sorry about that, but we got me on the fast food topic, and I have some experience in that department. It's getting hot up here, so I'm going to head back downstairs where it's nice and cold and get ready for some trivia. Hope you guys enjoyed today's show and learned something along the way. Tomorrow, again, there aren't giant names, but some nice consumer discretionaries like Kinder Morgan, Johnson & Johnson, Alcoa, United Airlines. Could be fun earnings announcements tomorrow. I will see you guys at 2 p.m. Take care, everybody. I will see you tomorrow. If you have questions, email me, TraderMerlin@gmail.com. I forgot my little plugs. Hit the like button, yada, yada, yada. I'll see you tomorrow.